Okay, hello, my name is Jake Partington, and I chose to do question number 1 from chapter 7. So we have Miscellaneous Bakery, and in part A of this, we have to create an income statement for the pie line's first year, and then it asks if the line is expected to be profitable. So as you can see up here, I already have all this stuff kind of set in from the problem itself. So we are going to come down and do income statement to start this problem off. Oops. Because that is what question A is asking for. And what I like to do is to make it look a little better, I highlight cell A and cell B, and then I right click and go down to format cells. And from here, I like to do the center across selection. Never ever do merge and center. Never. That is very bad, as a great professor had once told me. And then we're going to go to bold and do bold because it kind of makes it pop more and you can read the title easier. And then we want to border the cells. So I like doing this one right here. And then we're just going to click outline just like that. So then your cell will look like this. So now that we're doing an income statement, we're going to have to start off with the revenue, and then we will have the variable costs. Okay. And then we will have the contribution margin. Yes, that's spelled right. Sometimes it's hard to remember how to spell things. So then now we have the fixed costs, and then we have the EBIT, and then we have the interest expense. Make sure I spelled that the right way too. Yep, expense. Okay, so I skipped over this pretty quickly, but the EBIT is the earnings before interest and taxes. So, and then we're going to slowly take out the IT from it. And the first thing we're doing is taking out the interest expense. So then now we have EBT, or earnings before taxes. And then we are going to have taxes. And then finally, we will have the net income. Okay, so for the calculations for this, for revenue, we are going to do equals B2, which is the selling price per pie. So we always do an equal sign because that lets, whoa. Okay, I think I was holding shift for that. Okay, so we always do an equal sign because that lets Excel know that we are wanting to do a formula. So we're going to do equals B2 because that is a selling price per pie, and we are going to multiply that by B8, okay, which is the expected units sold. And the reason why we do that is because we're going to sell this many units at this price. This is the selling price for this many, this many units, you just multiply them. Okay, now we're going to have the variable cost. So we're going to do equals again, B3 times B8. And again, we're going to be multiplying something by the expected units sold. So in this case, it's going to be the variable cost per pie. And this lets us know how much money we're spending on the total amount of units that we expect to sell. So now we're going to do the contribution margin. So that is going to be the revenue minus the variable cost. So B12 minus B13, and that gives us our contribution margin. So then now we're going to do the fixed costs. And for this one, we are just going to do equals B5 because that is the fixed operating cost. So now we get down to EBIT, earnings before interest and taxes. And for this one, we're going to do the contribution margin minus the fixed cost, and that will give us the earnings before interest and taxes. So now we're going to go and look at the interest expense. And again, that one is going to be a kind of just straight from the top. So that one is B6. And then now we're going to get to the earnings before taxes. So for this one, we're going to do equals B16 minus B17 because we are subtracting the interest expense from the earnings before interest and taxes and finding the interest before just taxes by itself. So now we are getting to taxes, and that one is going to be equals the EBT, so B18 times B7. So we're going to multiply by B7 because that is the tax rate and we need to find it before taxes. So B7 here, and right there we get negative 375. So now we are going to find the net income, which is basically going to just be the earnings before. So we're going to take the taxes out of that EBT and kind of just have it as earnings before or net income. So we will do B18 minus B19, and there we will get $1,125, or negative $1,125. So we come over here back to the problem, and we can see create an income statement for the Pyline's first year, done. Is the line expected to be profitable? So looking at this number right here, it's negative $1,125. We can say that no, we do not think that it is going to be profitable. Okay, now what does question B look like? Calculate the operating break-even point in both units and dollars. Okay, so we're going to come down here to number 22, and we're going to do break even, and then we're going to do units in parentheses. I guess I'll make that E in uppercase just to make it look better. And then we're going to go down to 23 and do break even and put in parentheses dollars. Okay, and close that. And then we're going to go back up. So for the units, we are going to do equals. We are going to come up and look at the fixed operating cost, B5, and we are going to divide that by basically the contribution margin. So we're going to do parentheses B2 minus B3, and then that equals 4,166.67. So now we're going to go down to the break-even dollars. So for this one, we are just going to do the break-even in units, so B22, and we are going to multiply that by the selling price per pie, so B2. And for that, we get $70,833.33. So what I will do is I will turn this into I will use the counting number format. Oops. So you can see right here, it's a bunch of numbers. That is because this cell is not wide enough for the numbers to all fit. So don't worry, that's an easy fix. We will go up and double click in between cells B and C. And right there, it just bumped it over and created this nice looking number right here, $70,833.33. Okay, so now looking at the question, we did calculate the operating break-even in both, or break-even point in both units and dollars. So now we are going to look at question C. How many pies would Miss Elanius need to sell in order to achieve an EBIT, earnings before interest and tax, of $20,000? So we will come down here, and right here we will do units needed for an EBIT of $20,000. Okay, so as you can see here also it bleeds into cell B. So we're going to do what we did with this number right here and come up and double click between A and B just to open up the cell and format it a little better. Okay, so for this one, we are going to do equal sign, the $20,000, and then we are going to add B5, which is the operating cost. Okay, we're going to add the operating cost, which is 25, or here, actually, we're going to we're going to put the cell formula into there. Okay, and then we are going to add parentheses to this. Oops, okay. Some technical difficulties. I forgot that you can't do that. Okay, so we're going to do parentheses this, and then we are going to divide this by the contribution margin. Okay, so we're going to do divided by B4, and right there we get 7,500 units. So in order for us to get an earnings before interest and taxes of $20,000, we will need to sell 7,500 units. Okay, now we are going on to question D. So we are going to use the GoalSeek tool to determine the selling price per pie that would allow Miss Elanius to break even in terms of its net income. So for this, we are going to go up to the Data tab, click that, and then we're going to go all the way over to the right and click What If Analysis, and then we will click GoalSeek. And for this one, we are going to set the cell as B20, or the net income, because that is what we're trying to find. And then we want that to go to 0, And in order to get the net income to 0, we want to change the selling price per pie, which is B2. Okay, so now I'm going to click OK. And as you can see right here, the net income dropped down to 0, and the selling price per pie went up to $17.33 per pie. So what this means is that in order for us to break even and get a net income of 0 and a net loss of 0 and just kind of be even with everything, we would need to sell each pie for $17.33. Okay, so now I'm going to click cancel for this one so everything can go back. And now we are going to move to question E, which is calculate the DOL, DFL, and DCL. Okay, so we're going to come down here, and I'm going to put DOL, DFL, and DCL. Okay, so for the degree of operating loss, that one we will do an equal sign, and then we will come up and see the contribution margin, and we will divide the contribution margin divided by the earnings before interest and taxes. Okay, so that will be B14 divided by B16. Right there we get 13.5. So now we're going to look at the degree of financial leverage, and that one is going to be the EBIT, or B16, so equals B16. And that one is going to be divided by the EBT, so the earnings before taxes, which is B18. Okay, and right there we get negative 1.33. So then for the DCL, you just multiply those two together. So you do B equals B27 times B28. Just like that, we find that our DCL is a negative 18. And yeah, that looks to be about all the problems answered. I'm just going to go through here and kind of touch up on our income statement right here. So what I like to do is I like to format the cells. So this way it's going to adjust the top one, but we will come back and fix that. So then I'm just adding these lines to the cells to kind of make it look a little bit better. And then for this one, I'm going to come back and do a thicker line for the bottom so that you know that this is the title. Okay, so yeah, that is question number 1 from chapter 7. And thank you so much for watching this video. And I hope you have a great rest of your day. Thank you.